Hi everybody, welcome to Christensen Wealth Management. I'm Michael Christensen. Thanks for taking time to watch this market update and industry sector review for the week ending Friday, May 25th, 2018. Before I jump into the stock market charts, I would like to begin with the quote of the week. This week's quote is from Andy Stanley. Andy Stanley founded North Point Community Church in 1995. The church has now grown to 6 campuses and over 32,000 attendees each week, making it one of the largest churches in the United States. He once said, "Everybody ends up somewhere in life. A few people end up somewhere on purpose. Those are the ones with vision." Those are some wise words from Andy Stanley. Well, we have had a lot of volatility, but really the stock market has gone mostly sideways since we last talked, or since I made my last video, that is. I'd like to just go ahead and jump right into the charts, beginning with the Dow Jones Industrial Average. Okay, before I begin, I would like to say that the following charts you're about to see are 6-month charts from November 24th, 2017 to May 24th, 2018. Looking at this chart of the Dow Jones Industrial Average, we have two confirmations of strength right now. We've got the 5-day moving average in red above the 20-day moving average in blue, which is our short-term strength confirmation. And then we have the 20-day moving average in blue above the 50-day moving average in purple, which is our intermediate term strength confirmation. So short-term is hours to days, and the intermediate term is more days to weeks. So right now we've had a few weeks of strength in the Dow Jones Industrial Average. And if I draw that declining tops line from the past several weeks, from the highs of January 26th down to here, let me make that line a little bigger so you can see it. Well, we have a breakout from a few weeks ago. You can see that the Dow broke out of this declining trend and it popped up here and hit this top May 14th and then has gone sideways for the last 10 calendar days. So right now the Dow is just kind of hanging out, not doing much for the last 10 days, but we do have some strength and we'll just keep an eye on it and see if that upward trend continues. Right now it can go either way. It could go higher or lower at this point. So next week, the week after Memorial Day weekend, we'll finally have some direction for this Dow Jones. Here's the chart of the S&P 500 stock index, and like the Dow, we've got the 5-day moving average in red above the 20-day moving average in blue, which is a sign of short-term strength. And then we have the 20-day moving average in blue above the 50-day moving average in purple, which is an intermediate term signal of strength as well. So things are looking pretty good for the last, I'd say, 30 calendar days for the S&P 500. But like the Dow, we've gone sideways since about May 10th. So that's 14 calendar days of sideways movement. So right now, I'm just waiting to see if this thing breaks higher and continues its upward path or starts to turn lower. So let's just keep an eye on this until we get some signal of direction. And like the Dow, if I do that declining tops line starting with January 26th, you can see that we had a second, the all-time high here, another touch on February 9th, another touch April 18th, and we finally broke through that on about May 8th or May 9th and came up here and then went sideways. So that declining trend has been broken, which could be a bullish sign, but it needs to continue that trajectory in the next month ahead. Here's the chart of the NASDAQ 100 stock index, and we have also had a lot of sideways movement. No change since May 10th as well. We still have that possible, but beginning to look unlikely head and shoulders pattern, where we have the left shoulder over here on January 26th. The head of this pattern would be March 12th, and the right shoulder would be May 10th. But it doesn't want to go down at this point. It's just kind of hanging out, going sideways. So I'll keep an eye on it, but the 5-day moving average in red is above the blue 20-day moving average, which is short-term strength, and the 20-day moving average in blue is above the purple 50-day moving average, which is intermediate term strength as well. So again, things are looking pretty good and stable for the moment on the NASDAQ 100. No sign of bearishness at all in the S&P 500, the Dow, or the NASDAQ, except for the fact that none of those three indexes have gotten back to their prior all-time highs, which is a little concerning. We keep making lower highs, and we're coming into the statistically weaker part of the year for investing, which is the May to November 1st time frame. So we'll just keep an eye on it. Always keep a little bit of caution in our thoughts as we go through the spring and summer here. And right now, all these three indexes are looking pretty good. Here's the chart of the S&P 500 Information Technology Stock Index, and it is the, well, it's one of the strongest ones of the bunch. However, this particular index also has failed to reach its prior all-time high, which is March 12th. So we came up here and hit this peak on May 10th, and then we've gone sideways. One thing I'm watching is to see if this is in fact a bullish pattern, which might lead us higher. It can be called in the technical analysis world a bullish flag pattern, but of course only if it comes true. If you have the, I'll draw a line, I'll show you the flag pole from here to here, and then the flag itself would be this pattern from down here. These two lines would make the flag. So we'll see. If it breaks above that pattern, then this could take us to new highs. I'll watch and see how that does over the next week or so, but it's looking really good right now. The 5-day moving average in red is clearly above that 20-day moving average in blue, which is short-term strength. It's pretty obvious after this big run up here from April 25th. And then that blue 20-day moving average is above the purple 50-day moving average, which is a sign of intermediate term strength as well. So things are looking pretty good for the Information Technology Stock Index. Here's the chart of the S&P 500 Consumer Staples Stock Index, and I may sound like a broken record here, but this index just cannot get out of its way. It has not shown any sign of life whatsoever since January 26th. I mean, that's obvious. You just look at this chart, and the black line, which represents the price of this index, really hasn't done anything. It just keeps consolidating and going lower, and consolidates sideways and goes lower. So yeah, it's been in an uptrend since May 3rd, but boy, that does not look like a sign of strength, even though we technically have the red 5-day average above the blue 20-day average, which is a confirmation of short-term strength. But this pattern down here looks like it's more of a sideways movement with a half-heartedness in its trajectory. So we'll keep an eye on it, but right now, consumer staples continues to look pretty weak. Just use caution. Obviously, the blue 20-day moving average is below the 50-day moving average, which is a pretty solid confirmation of intermediate-term weakness. Here's the chart of the S&P 500 Industrial Stock Index, and this did get a little bit of a break here, starting with May 2nd, and we had this nice solid rally. There's a couple ways to look at this. First of all, the obvious ones are the 5-day moving average in red is above the blue 20-day moving average, which is a sign of short-term strength because of this rally over the last 3 or 4 weeks. But the 20-day moving average in blue is still below the 50-day moving average, which is a sign of intermediate term weakness still, because yeah, we've pretty much gone sideways for what, since February. But it's trying to make its move, and if you look at the breakout connecting the highs from January 26th on down, you can see that it touched here March 9th, touched here again April 18th, and then broke out on May 17th, and then popped up here before falling back some. But it's kind of a mixed signal right now with that intermediate term weakness. I would like to see a little bit more out of this. We popped up here, which was higher than the high of April 18th, but then we fell right back down again, and as of this recording, on May 24th, the price of the industrials index is back below that April 18th high. So I'd like to see this thing get back above that April 18th high before I feel better about it. So I'll just keep an eye on it. Right now, just use some caution because of that intermediate term weakness signal, which is still in effect on industrials. Here's the chart of the S&P 500 utilities stock index, and as you can see, the beautiful parallel trend that the utilities was in since February 8th has been broken in this month of May. So the utilities finally broke below that trend on about May 14th or May 15th, came down here to a bottom on May 18th and has rallied up for a few days back up to here. But it doesn't change the fact that the 5-day moving average in red is now below the blue 20-day moving average, indicating short-term weakness. And as of Thursday, May 24th, the blue 20-day moving average has crossed the purple 50-day moving average, confirming intermediate term weakness as well. So use caution with utilities. It's kind of sad after this really nice upward trend, but all trends typically come to an end, and this one has as of May 24th. So I'll keep an eye on it, let you know if anything changes, but right now we'll just keep using caution on utilities, and that's all we can do. Here's the chart of the S&P 500 Consumer Discretionary Stock Index, also referred to sometimes as the cyclical stocks. You can see we've had a pretty solid upward trend here since that bottom on April 2nd, and right now the 5-day moving average in red is above the 20-day moving average in blue, indicating short-term strength, and the blue 20-day moving average is above the 50-day moving average, indicating intermediate term strength as well. So things are looking pretty good for this discretionary stock index since that low of April 2nd. However, we haven't gotten above these two highs. We're still below the high of March 12th, and we're still below the high of February 26th, and way below, far below the high of January 26th. So there is still some resistance up above as we try to break through those prior highs, but we'll just have to wait and see where we go the week after Memorial Day and into June. But right now, things are looking strong, and we'll just keep an eye on it. Here's the chart of the Dow Jones Financial Stock Index, and you can see the 5-day moving average in red is above the 20-day moving average in blue, indicating short-term strength, and the blue 20-day moving average is above the purple 50-day moving average, indicating intermediate term strength as well. Let me go ahead and draw a downward trend line from the high of January 26th to the high of, what is that? That is March 9th. So we have a little bit of a problem here with the financial stocks because we have that high January 26th. The second point on that line is March 9th. We touched it again on May 10th and May 11th. Tried to break through it on May 22nd and then failed. So the financials are looking much weaker than the Dow, the S&P 500, and the NASDAQ. So it has not broken its downward trend line. That could be a concern, but we do have the short and intermediate term strength indicators, or confirmations as I might call it, but we need to get above that red downward trend line before we can breathe any sigh of relief. So continue to use caution on the financial stocks as it has not broken above that declining trend from March 9th. Here's the Dow Jones Oil and Gas Stock Index, and we have had a very epic move here that began the first week of April, launching us up and taking out that prior high from January 22nd. However, there is some concern, even though, let me just go ahead and mention that that 5-day average is above the blue 20-day average, and the 20-day average is above the 50-day moving average quite substantially. So we have a lot of short-term strength and intermediate-term strength. But the problem I see that needs to be watched carefully is, as of May 24th, the price of this index is back below the high of January 22nd. So the question is, did we pop above it and peak on May 21st and then fall back below, which could be a sign of a false breakout? We'll have to just keep a close eye on this and wait for that 5-day moving average to turn back up again. Right now we have had, let's see, 24th, 23rd. So May 21st was the top, and for the last several trading days it's been in decline. It needs to stop doing that and turn up again before I can feel better about the oil and gas stock index. So looking pretty good from a strength indicator standpoint, but the false breakout is hard to ignore, and I want to see this going back up again. Here's the Dow Jones Healthcare Stock Index, and we currently have the 5-day moving average in red above the blue 20-day moving average, indicating short-term strength. That comes from this little rally we had starting May 8th. The blue 20-day moving average did cross above the 50-day moving average on May 22nd, indicating intermediate term strength as well. However, this particular index really hasn't gone anywhere since April 27th, and you can go all the way back here if you want to and say it hasn't gone anywhere since February 7th also. This index looks extremely weak because all it's been doing is going sideways, and it has not made any forward progress since really January 2nd. Right now it's looks like it's out of gas and it's just kind of trending sideways. So I would just use caution. Even though we have a short-term strength indicator and an intermediate-term strength indicator, it's not showing any sign of a breakout to the upside or the downside. Just sideways action, lots of indecision, and no energy. So stay tuned. I'll keep an eye on it, but use caution. Here's the Dow Jones Transportation Stock Index, and I've been covering this in all of the videos recently and talking about this parallel trend channel that the transports have been stuck in. We have had this first trend line that was touched on February 26th. The second trend line, or second touch, was April 18th, and we tried to break it back here earlier in May, and we finally broke above it May 21st, but immediately failed, and then May 24th we finally closed above it one more time. If this holds, that could be a good sign for the transportation. I was waiting for a breakout either to the upside or the downside. The problem is the last breakout we had, which was May 21st, resulted in an immediate failure back below the line. If this does hold, then good things may be coming for transportation. We'll just have to see. I will keep an eye on it and let you know. But right now we've got the 5-day moving average in red is above the 20-day moving average in blue, indicating short-term strength. And the blue 20-day moving average is above the 50-day moving average in purple, indicating intermediate-term strength as well. So things are looking better for transportation, and they did pop above that trend line. So we'll see where we go over the next month or so, but right now looking pretty good. Here's the chart of the Dow Jones Real Estate Stock Index, and it appears to have replaced the utilities sector in its very similar trend pattern here. The real estate kind of entered this parallel trend channel back on either February 5th or February 8th, depending on which day you want to use, and we've been bouncing back and forth between these two parallel trend lines since then. And right now we've got the 5-day moving average in red, just slightly below the 20-day moving average. Technically it is a weakness indicator for the moment. Might change tomorrow if we get a nice up day. but the 20-day moving average in blue is above the 50-day moving average in purple and has been there since April 4th. So that's a pretty good sign, and it's trying to really push its way to the upside. But right now it is, I would wait for that 5-day moving average to kind of pop back up above that 20. But things are looking pretty good for the real estate sector since early February, and we'll just see if it can hold on to that trend channel unlike the utilities sector did. Thanks again for watching this stock market update. I hope you found the charts and information useful. Before you go, please do me a favor and click the subscribe button on this video and then click the little bell next to it so you'll be notified whenever additional videos are posted. And also in the summary description of the video, you will find links to the Facebook, LinkedIn, Twitter, and the website for Christensen Wealth Management. If you use those social media sites, please visit them and like or follow Christensen Wealth Management while you are there. That way I can communicate with you using all those tools available whenever I can and be effective at keeping you up to date with information. Well, have a great day and a great weekend or a great week, depending on when you get this. And I look forward to talking to you in about another 5 to 7 days. Bye-bye.